Hello, everybody. I hope you're having a great weekend so far. The market had a solid week overall, but I want to remind everybody it is quite possible that 824 was a successful capitulation low. My problem with that date is obviously where we closed on the Nasdaq, and it's just easier for me to pull up the NYSE over the S&P 500 just because you got to put a dash somewhere, and that's always complicated using numbers and symbols for me with my keyboard. So as you can see here with the NYSE, volume below average as we move along. NASDAQ below average. We're right at the August, July 250-day moving average resistance levels. The Russell 2000, we're not there yet, but we're getting there. Same with the NYSE. So as we think about what's ahead, could 824 been a low? Yeah, when you look at the VIX, this thing jumped all the way up to 53 intraday. And I want to remind you, while that's not an all-time low and or all-time high, because in 2008, don't forget, we were managed to get all the way to 89, and then never forget that back in the 87 crash, the VIX hit 172. So while it was kind of very fear-based, it still, isn't anything too extreme. But something that also came in line, not only with the VIX, but a very key thing for me, is the Investors Intelligence Survey. Now, I'm going to bring up Ryan Detrick's webpage on StockTwits. You're not going to make money off of him, but he posts great charts, like just for overall market references. And you can see that the Intelligent Bears plus correction is up to 74%, the most since December 2008. And of course, he reminds you that it dropped another 25% from the very first time it did that in 2008. So never think that that's an automatic bottom. But hey, fear is definitely increasing even on the Investors Intelligence Survey. And then if you look at the correction, the Investors Intelligence correction, that's with bulls and bears that think that we're going to have a correction. That's the second highest level in 30 years. And that's even higher than the level in 2008, 2009, and in late 2014. So it's pretty interesting on that note. And you can see that the bears have come up quite a lot. They're actually at 27.9. They've inverted with the bulls to 25.7. And as you can see, that is the very first time since 2011. So it's been 4 years. But never forget, it can get much worse with a bigger gap as it showed in 2008. So we're nowhere near the lows. Now, while bulls are at 5-year lows at 25.7%, 5-year highs for bears is 46.3, and we're at 27.9, so we could have further to go. But at least these things are starting to line up. And overall, there's still plays out there. After hours in the chat room, you can see AQXP. It's, I guess, a $8 billion hedge fund has invested in 2 million plus shares. So it gapped up and started watching around 1950 after hours, and it's up at 2150. So these plays are still into work, definitely working. BVUS was a recent Carl Icahn billionaire play, and you can see in 3 days it's up 47%, but each day intraday, a lot of action. And then EFOI, we've been saying to watch this to go short. Of course, Interactive Brokers doesn't have shares, but our guy in the chat room, Paul, while I was sleeping, notified everybody. We've been watching it forever, and he nailed it on Thursday around the 28.90 and the 28 level, just cents off the top. He nailed it that it was getting ready to break down, roll over intraday, and boom, overnight, 28% drop on Friday. So, there's still some action out there. And don't forget, 2 new longs that we weren't able to hit because our limits missed. MOH, this damn gapping market. By the way, this market's gapping around 1%. But just to let you know, we've had more 1% gap arounds in the past month, or actually in the month of September, I do believe. The only other time that we've had this many 1% moves in a month is 2008 and 1929. So pretty crazy that 1929 and 2008, and then 2015 is the last time we've had this many kind of gap moves in the overall market that's over 1%. But MOH missed, but you can see it's working, and EDAP missed our limits barely, 379, hit 384, but you can see in 2 days it's up 17%, 15% if you split your orders up limit market like I would have if I would have seen it gapping up. If we were in an uptrending market, this market is not good enough for me to just go ahead and buy stock. So with that being said, flagged a couple on Friday. Calm, base isn't long enough to take, so I passed. ABCW base once again isn't symmetrical enough to take. And REPH, if you look, it looks good there, but if you look at an arithmetic chart, you can see it's actually, that's moved a lot off of its lows and probably needs to build a handle to be good to go. And then also we have as our only new position, oh, sorry, the Mets game is starting over on my other computer. Let me turn the sound down even though you guys probably can't hear it. Okay, so now that that is fixed, SCAI is our one new long signal for Monday. You can see it's bouncing right off the 200-day moving average on above average volume, barely above average volume, and that's kind of a problem, but whatever. Pocket pivot point signal confirming its most recent pocket pivot point signal off the 200-day moving average on September 2nd. It did not violate those lows following the first pocket pivot point signal, and now we're getting a second one with the stock ending near its high of the day, only 1 cent off its high of the day. BOP is still green, but it's trending in the wrong direction. Slight concern. Volume wasn't that much above average, and that's why it was not confirmed in any other scan. But it's CanSlim quality. Medical health services stocks are the stocks that are doing the best for me, so I'm going to stick with it. I don't risk much if I'm wrong. The final, absolute final sell stop level should be below 35.39. I'm going to probably put half at 35.84, half at 35.39, so we don't risk much. So even though the BOP's going the wrong way, hey, at least it's green. And even though volume isn't huge, hey, at least it's above average. Got a back-to-back pocket pivot point signal right off the 200-day moving average, so our line in the sand is very clear. Already had a big shakeout day, so, if we do fail these lows, we'll know that it is sick, but that looks like it's going to probably hold, and you can totally tell it was a flash crash because it was done on no volume. But SCAI, because it's only in CanSlim scan, and I know it's a high potential reward, very, very low risk. You can increase it if you want. Me, I'm very disciplined. We're not in a solid uptrend yet. I know that we're under a fall through day, but we had a distribution day immediately after fall through day. 99% of all distribution days after a fall through day that immediately happen fail. There's only one uptrend ever that survived after an immediate distribution day, and I can't remember when that was. But another key thing is that this is September. We're not in October yet. We do all this, and now we're in October, sure. So if the market can keep on backing and filling, maybe it tries to retest the lows, but holds, makes a new low, then starts to grind higher, giving another follow-through day. Yeah, if we're in October, we've probably seen the lows then, because we've got the fear in the VIX on 824. We now had Investors Intelligence and survey inverted for the first time since 2011. So some things are lined up, but it could still be very rough on the short term. So cash is still king overall. No sells on Friday on an end of day basis. I do not think I had any sell stops hit either. So nothing to do on that end. Just SCAI.